Alright, so good morning. It's 8:39 a.m. Kenyan time, and welcome to this analysis. So yesterday I had tweeted on my X account that I will be doing a short video just to explain my thought pattern over the trade that I took during London close session to be specific. And so I'm going to explain it, but before I do that, being that we've already gone past the mid-week mark, it's important to just look at how this market is playing so far. So you can clearly see that on the bigger structure, this is what we are looking at. We are looking at this divergence on the daily time frame. So the market still has some room to move to the upside, and so we are pushing towards this mark. That's why we've been calling 25.50 and higher for some time now, and so we will continue to see how this market plays. And so remember, this is the daily time frame, and if I can just make it a bit bigger so that we see how the candles look like. You can clearly see how we traded yesterday. So the low of yesterday did not take the previous day's low. So just by looking at how the market has been moving since Monday, this was Monday, Tuesday, we came into the region of Monday's price action and then pushed higher and closed higher. Yesterday, we dropped into this week but did not take the low for Tuesday, and then we closed a little bit below Tuesday's close. So today we opened the market here, and then we are currently trading up. So just by looking at this, you can clearly see that this looks like a very rich place, for just a second. Where is that? Here it is. So this looks like a very, okay, let me just use a straight line. This looks like a very rich place for price to come to in terms of liquidity. It looks like a good place where we can have our draw on liquidity up here. So we are looking at this possibility that we are going to have our draw on liquidity, and I like putting a question mark just to remind you that this is but an analysis. So we trade what we see, not what we think, but it's always important to have something that you're thinking about, which will guide you in your lower time frame entries. So that is what we are thinking of at the moment. And if you look at this market at the moment, you can also see that we are coming from this low down here. That low is still in the market. So ideally, looking at this zone, we can say we are trading from around 24.75 in terms of big numbers and mid big numbers. So 24.75 to around 25 or higher. So we are looking to see if we will go back to 25 or even break this and go now much higher. Remember, we have 25.31 as our all-time high at the moment. This is our all-time high. Let's just delineate that here. This is our all-time high, and all-time high we will mark it as ATH, all-time high. So that's our all-time high at the moment. So we want to see if price will go and break that. And so remember, we've been consolidating. So the whole of this, from this high to this low, the whole of this has been consolidation. And so maybe the market might want to tap up here and then come and do a fakey down here and then now push and go up. That's just a thought. Then another thing that we are also looking at, I told you that I do ICT concepts are like my go-to or my main trading strategy. So this is an order block down here, and see how these weeks have come into it. and this seems to be holding price to that level. So this is what we are looking at in terms of the daily time frame. So when we drill it down to H4, there's nothing that we're going to do. There's nothing much that we will do here, apart from just maybe mark this order block that seems to be holding price and pushing price to the upside. Yes, we wicked through it, but we never closed under it, so that's a very good thing that happened there. And so we are looking to see if we will come to these highs. We are looking to see if we'll come to these highs and maybe even tap the all-time highs. Tap the all-time highs. Let me use my fib to see something. So if I take this, that is quite big. Okay, so what if I take it like this? Okay, so that's okay, that's just okay. So let us see what this market wants to do. Then we drill down to H1. So on H1 we are going to introduce a few markings, and then I want to explain something. So the video might be a bit longer, but just bear with me and follow me as I share my thought pattern. So I want to mark Monday's price action, and then I walk you through the whole of it from the time the market opened, that is Monday. Then we look for Tuesday. Tuesday is around this area. Then we go look for Wednesday. Wednesday is around this area. Yes, and then Thursday, which we are in today, it opened around this area. Yes, so this is our current price action, and just by the look of things you can clearly see that this market has been bullish right from Monday. So Monday gave us our low of the week, or our current low of the week. So this is low of the week, and because we have already gone past the midpoint of the week, which was yesterday on Wednesday, there's a possibility that this might actually hold to be the low of the week, unless price decides that this is now our high of the week. So for the upper side, what I will do, I will mark this as the high of the week, but I will mark it as initial high of the week. So that is our initial high of the week. Let me just move it a bit up there. So this is our initial, misspelled that one, initial high of the week. So that's the initial high of the week. So I'm estimating that perhaps price wants to push higher and take this and just form another high of the week. And you see we are very close to our all-time high, even on the 1 hour time frame. You can clearly see that. And then at the same time, I'm going to introduce a couple of numbers, and then the first number that I will introduce is our Sunday open. So Sunday open, you pick 3 a.m. Remember, all these times are in Kenyan time, so 3 a.m. and extend it all the way. And maybe we are going to change that color to something like that, and then we are going to label it as, let me make that, so I'll label this as Sunday open. So if you are a swing trader, for instance, and then you are looking to trade, maybe you have determined that your trend is a bullish trend. So if you are looking to trade the day, the weekly range, or what we call one shot one kill according to ICT, if you are looking to trade that, you will want to see your low of the week forming. If you are bullish, you'd like to see the low of the week forming under this Sunday open price. ICT teaches that, so you can check his channel to understand that better. So he teaches this very well, and then he says that look for price to form the low of the week under this Sunday open. And if you can carefully look at it with me, you will see that Monday, Tuesday, Wednesday, and now Thursday, there is no time apart from Monday that price was trading below Sunday open. So this one stands firmly as our current low of the week, and now we are pushing higher. Apart from Sunday open, another important line that I like using is the 7 a.m. open price. 7 a.m. open price. So for Monday, we had it here. So again, I'm also going to extend it all the way, and I know most times you're told just extend it to the end of the day because it delineates the true open for the day. But I want to show you some reactions that I have come to see myself of how price reacts to this number, of how price reacts to this particular open price. And so I'm going to mark this as 7 a.m. Monday. So that is for Monday, and then I'm just going to change a few things just to make it stand out differently. Then I'm also going to change, not that here. I'm going to change the text to a different color. There you go. So this is our 7 a.m. on Monday. And then let's continue and now go to Tuesday. So I will explain to you how we use this one on the intraday when we go to minute 15. But now on Tuesday, we looked at 7 a.m. again. So 7 a.m. was around this area here, and you can see it opened here and then dropped. So we will just copy this, come here and clone it. There you go. Pick this and come and fix it here. So that is 7 a.m. and then we'll change this day to Tuesday. So that is 7 a.m. on Tuesday, and I guess you can already see the reaction. On Wednesday, what price did, price came and tapped it and then pushed up. And after that, we are also going to do the same thing and clone this, clone it, and then you come, Control Z. So you will bring it to 7 a.m. on Wednesday. So that is Tuesday. On Wednesday, we are looking at 7 a.m. This is 6. This is 7. So we have our 7 a.m. around this area. So we'll pick this and bring it here. That is 7 a.m. on Wednesday, and you can see price is already reacting to it at the moment. That's where we are at the moment. So this is good. So this is on Wednesday. That is for Wednesday. And then now for today, again we will clone this line. Let's just clone it first. Then we'll bring it down. So for today, 7 a.m. was, this is 6, this is 7, so 7 a.m. is around here. So that is Thursday. Good. So that is what we are looking at. So we want to see how price will react. If we close above this and then continue higher, then this is what we are targeting. But we can also bounce and come just below here. Remember, we have this nice fair value gap down here. So we can bounce from here, come into this fair value gap, form a low of the day, and then trade higher. That's like what I am anticipating that might happen. But Control Z. That's what I'm anticipating that might happen. But now, let's go down to minute 15 with our levels marked. And then I also want to bring it to your attention one more thing that I have not introduced here. Let me just introduce it real quick. So I'm going to mark this down here as we are trading between 24.75. So it's very important that we have that in mind, 24.75. Then for style, let's change it to black. So we are trading between 24.75 and 24.75 is down here, and 25.50. So these are like the outer limits that we are looking at, and then I'll show you the inner limits. So text, no coordinates, 25.50. So 25.50 is up there. That's where you can see it. Now, internally, what we are looking at currently, we are looking at the possibility that this market is playing around 25, and you'll see how many times it has really reacted to that number 25 versus we also have 25.75 not 25.75 25.00 yeah 25.00. So this is 25.00 and this is 25.25. So in between here is where the market is currently trading, and so we might have that retracement that I've just talked about. And remember, this is 7 a.m. on Thursday, so that retracement is possible. And if we get that retracement, I'm thinking of a possibility that we might be coming to around this area. So from here we might come down here and then push up and maybe target now those highs that we are looking at on the upside. So that's what I'm thinking. So when we are here, let me show you yesterday's trade, the one that I had posted, and then we'll end the video at that point. So this level is the level that I did not want to see price close below it, and indeed price has not closed below that level. So I know the entry at 8:30, there are specific things that I normally look at. So the entry around 8:30 Kenyan time was around this place, and it was a reaction to this order block. So this order block was invalidated because the market decided to do a three-wave pullback or a three-push pullback. So we had a drop, a pullback, and then a drop, and then now we started moving to the upside. So if you had your stop loss here, you would have been stopped out. But because this is a bigger, this is where now Elliott wave comes in and saves the day. So because this is a bigger signal or a bigger setup from minute 15, you will first of all establish that yes, we have divergence down here, which in my case it signifies the beginning of a retracement or a reversal. So we have that as our divergence. So when I saw that, I counted it as a possible one, a possible two. This is what I saw. So I took this as a 1 and a 2, a 1 and a 2, and you can see 3 is exactly 161.8, which is nice. Then the rule is we don't want to see price close below this candle, so this is the right place to place your stop loss. I hope you guys are marking the things that I'm talking about. This is the best place for you to have your stop loss. Get your stop loss behind that. That is where you're supposed to have your stop loss, right there. Behind that is where you're supposed to have your stop loss. Then see the market came down, and then you can also look at that retracement to determine how deep the retracement was. So you can see the retracement came to around 50% retracement level, which is nice. So it came just slightly under 50%, and that's what we also call a below equilibrium in ICT. Then after that, what did the market do? The market decided to start pushing to the upside. So we had a setup coming in at around 22:30, that is 10:30 p.m. Kenyan time, and you see the initial the first setup was here. So all this time from this point to this point, this was drawdown, but remember the stop loss is secured down here. Don't do okay, what I know with gold does not really like tight stop losses. You can have always place your stop loss behind structure, where you know that if it is a hit, then there's a very big possibility that you are wrong. And if you are wrong, you just accept that you're wrong. We don't fight these markets, and we don't trade what we think, we trade what we see. So again, follow me. This is 1, 2, 3, and this is 4. After this 4, we are expecting 5. So you can forecast where 5 is going to go by use of the fib tool. So you start from 2 to 3, pull to 4, and then you can see 5 has the potential of actually trading all the way back to this initial high of the week. So the trade that I took here is secured, and I'm not going to take it out. I'm not going to take them out until we hit this level. Once we hit these levels, then I can now start thinking of a possibility, maybe now of a pullback, a 50% pullback of that range, and then now again we start going to the upside. So that is what I'm thinking. And maybe before we end, let us look at the economic calendar just to understand what the calendar has for us today. Let's just see what the calendar has for us today. Forex Factory. And as that is loading, so if you're not following me on X, feel free to follow me. You'll see the link in the description of this video. So yesterday I had tweeted, this is my account. Yesterday I had tweeted about, here I am, let me use this. I had tweeted about, this is it. I had actually tweeted, so these counts that I had made them on minute 5. So as you have just seen, the market actually did a slight dip. Let's see, let's open that. Let me see. Yes. So this market did a slight dip, and you see it did not close below. There was this fair value gap, so we did a push up and then we dropped. That is now the nature of correction. Sometimes it's tricky to know if the market wants to do a simple correction or a complex correction. So that is what we did. We moved up slightly and then we dropped, and you see even in this, our target is still that high, very close to 25.31. That is still the target. So the target has not changed. And if you were kicked out and then you came back, then right now you must be somewhere good, because we are actually trading around this area. So that is that. Now today we have these pieces of news, and remember again the timings are in Kenyan time. So we have core PPI, we have PPI month on month, and then we have unemployment claims. All of these are happening at 3:30 p.m. So as you trade, as you manage your trades, let us see how this one works, how this one happens. And as usual, I'm going to do post PPI video. Yesterday I wanted to do a post CPI video, but I did not get around to it. But today I'll do a post PPI video, depending on how it plays out, so that I can tell you if 2550 is still the target for the long term, or if we are likely to be coming to the downside. So with that, we can end this video there. Like, share, subscribe, and let us grow the channel, and also let us grow our accounts together. Thank you, and have a good trading day. Thank you.